Welcome to Momentum Monday. Howard, how's the weather in Phoenix? Are you in Phoenix?
I'm in Phoenix. There you go. It's a beautiful day. You can see the sun shining. Can you see that, Ivan?
Yes, I can see it. Can you see the snow?
No, go back to your screen. Go back to your screen there, Ivan. Let me see outside the window there in Bulgaria.
I don't think you can see much because it's dark. So sorry.
Let's see if there's looting. Is there looting going on? It's Bulgaria. People are stealing.
No, it's very safe. It's safer than Arizona for sure.
So why aren't your windows open? And
it's dark outside, Howard.
Okay. Well, it's not dark anymore in the market. That's pretty exciting. Let's go to a weekly here, Ivan. And I think today's discussion will be about today's. I would say today's a better day to panic. You know, if you didn't get a chance to panic and you were scared out of your mind a couple weeks ago about World War III and Trump and Apple and Facebook and FANG, today is a much better day to sell. I don't think we are out of the woods by a long shot, but let's be optimistic for a moment and speculate. Ivan, you're sick, right? So you want me to kind of drive today?
Yeah. I have a sore throat. I'm coughing a little bit, so I think it's better if you do most of the talking.
Poor Ivan. Okay, Ivan. So I'm going to bring it home for you today. I'm going to go through a lot of ideas because first thing I want to announce to everybody who listens to Momentum Monday. Let's pull up your market wisdom site, Ivan. Go to the home page. So we're back. I decided to, into this panic, build back the Peloton 2.0 with a model portfolio, and we're going to start this week and this month. I've got a ton of ideas over the last 6 months, Ivan and I. So we've added kind of a model portfolio and updating my 8 to 80 to market wisdom. If you were a Peloton subscriber, I've got an extra special discount. Just email me. But Ivan, how much? We haven't raised the price. So how much is market wisdom? Basically, everything stays the same. Just a updated site and adding my portfolio, long-term portfolio, and some monthly commentary.
Yeah, the price is still the same. It's $99 a month or $940 a year.
Mm-hmm.
And we are adding Howard's long-term picks and model portfolio to the website, so we're adding even more value.
Well, I'm going to keep my 8 to 80, and we'll probably start a stock to its room here soon, so people can banter from the group. So a little more expensive than what my Peloton was, but that's because Ivan, we really have figured out, you know, there's something for all markets here. Ivan, you did well getting short, and then you also bought some TQQQ at the bottom. So from a swing trading perspective, Ivan, keep people busy in any market. I'm more about this monthly long form a la Peloton. And you still get the market momentum 50 list. So I'm pretty excited about all this. This is where we'll get our best ideas from. So let's now just go back to the markets, Ivan, and we'll rip through a bunch of stocks. All right, so here we are with the S&P, the NASDAQ. Let's go NASDAQ, Ivan. NASDAQ hasn't had as big a bounce, and I think that's because of Apple and Facebook and Google. They've really kind of just, they didn't, hey kids, please upstairs. Facebook, Apple, Google, and then the small caps have had a huge bounce, but they were really crushed.
Yeah, I think that, as we mentioned last Monday, all the major US stock indices are in new boxes. And I think the new box for SPY is around 230 to 260, and we are almost there. So I think from a swing trading,
if you were buying the dip, very good. Take some profits. If you were panicked, you were crazy not to do some real panicking today and sell some ideas. So that's off the top. Now, if we did bottom, great. Let's take a look at what will lead, and we've been covering that in our Momentum 50 list. But let's take a look. First stock back at all-time highs. We've got Atlassian, which is just the great Jira product for developers. So many, planning software. So many companies using this product. I'm kicking myself for it's just not in my portfolio, but this is a leader. Twilio closing. If we close today at all-time highs, up 10. The taking out this very loose formation. So these aren't the best formations. They've been very volatile and very loose. This is AYX, which is another enterprise software leader. So you can see the stocks that held up the best, as we always talk about here, are the ones breaking out. This is MongoDB, open source database platform, which we've been talking about for weeks. And then if we look at Okta, again, it's back above that gap now, and it looks like it would lead if we go higher. So it's enterprise. And let's take a look at Microsoft quickly. So you can see here where the market, we got down to the mid, Microsoft is obviously a much bigger company. The institutions are not, that's where they go to hide out in some of these leaders. And you can see Microsoft doesn't have the pin action as these smaller enterprise leaders have, but it's really only about 10% off all-time highs. So if this really was a bear market, for the fact that Microsoft only pulled back 10%, would be great. At the same time, you can see the box here, and that now would be an okay time if you were nervous to take some Microsoft off the table. I think if we are going to pull back again and test lows and start heading lower even and take out the lows of December, these would be some good selling points. But all in all, some really good action, at least off the panic lows. I think Ivan's pulling up the biotechs now, and I would have to say these are some of the companies that really got given up on in December. If we look at some of the gene editing companies that interest me, Ivan, not from a so these are companies that are very high risk. I would call them the Bitcoin of biotech. This is Edit, EDIT, and then the other one's CRSP. This is okay. This is another gene editing, but I'm following CRSP and Edit. You can see how that final give up in December and how they quickly at least pulled back into those bases. And so I think if you believe in machine learning and biotech and cancer fighting, I would say that washout. Again, fundamentally these companies are expensive and they don't make money, and if in a prolonged bear market, these stocks will continue to get crushed. But I'm starting to take a look at these because of the really loose, the panic price action. We saw that in some of the marijuana stocks as well. So I'm not going to get into those, but we saw that in some of the marijuana stocks. People just started giving up last week into December, and I think for people, GWPH, I saw people just give up on this. I took my losses in the 120s and 130s, but you can see that that tax loss selling in December just hit a crescendo, and a lot of the leading stocks, while they may not be bouncing today, if you like marijuana and you like biotech, there could be some washout plays there. And then let's go to your list, Ivan, the Momentum 50. Let's go to our list there.
Yeah, as you can see, we still have a lot of enterprise software stocks, and they were one of the few groups that held relatively well during the correction, along with gold and silver miners and some utilities. So now we have the two groups that are currently outperforming the markets are the ones that held the best, enterprise software, and the ones that got hit the worst, which is small cap biotech. And these are the two groups that are outperforming by a lot in the past couple of days. And this is something typical.
I guess we didn't talk about Splunk, but yeah, you can see Vericel and RareX are, if you want to do the opposite and buy the strongest biotechs coming out of this, RARX and Vericel. What's RAR? I don't even know what it is. Yeah, so it's a IPO in 2016. And what was the other one? VCEL.
Yeah.
But that stock had just been in a massive bear market. If you look back at a weekly or monthly, where's the monthly? Yeah. So you can see, I don't know if this was a different company back then or if, but you can go back to the 90s and see this. Yeah. So I don't know. It seems like a new company. I think you can. I'd have to do some work, but this is 99 relative strength. It's going to never get back to all-time highs here, but you can see. Let's go back to a daily. This is truly not giving up an inch, and today breaking out to multi-year highs. So there is strength. The question I think people have to ask themselves, Ivan, is where are we? Is this a 3-month, 6-month relief rally? And stocks can still double. Don't get me wrong, like Okta, Twilio, Splunk, some of these Attunity, some of these smaller priced, smaller company stocks can still double in a bear market. So, even though the selling was panicky and that, technically there is a ton of damage, the markets are still open and people are still putting money to work. And while you have to understand where we are technically and that there is massive resistance because there's so much selling being done in Apple and Facebook and Google and some of the leaders of the past, that sorry, there's people calling me and it's connected to my phone, that it's not going to be easy. Now, if Google and Facebook and Apple somehow get a lift, let's talk about from a macro structure, dollar weakens, for Apple, and trade tariffs get settled. We could be off to the races. That doesn't mean that we may not still be in a bear market, but it just, you have to prepare yourself for the fact that stocks don't go up every day, and stocks, like they did in December, don't go down every day. And I'm kind of happy to see it. I'm going to do some changes to my 8 to 80 list in January. Let's go through. Let's take a look at Amazon quickly. So you can see that Amazon kind of broke down into the 1200s and has quickly regained 1600. So it's still down, 20% from its all-time highs, even after this rally. So we're not out of the woods yet, which is why I'm in I call it the sell the rip mode. I still am in the sell the rip mode, but you can't deny the strength. And so if you feel like taking some risk on any pullbacks, you got to focus on our momentum 50 list. Anything else you see, Ivan? Are you going to lighten up here on your NASDAQ trade that you had to the long side?
Yes, definitely. I mean, there are two things that I want to mention. One is that from a swing trading perspective, you should be looking at selling, taking profits here, and even going short if you're aggressive, just because all the indices are getting closer to their upper upper level of their supposedly new box. I mean, we don't know if 160 will turn into resistance, but it's a good probability trade, I think, if you risk 50 cents or a dollar to short. And then the other thing is that the next earnings season is knocking on the door. I think it starts next week, and it will be very interesting to see how the market will react to the company's results, because in the past 3 to 4 months, the market has basically discounted a potential recession, and it will be interesting to see if the company's numbers will confirm that recession. I mean, we already heard some pretty poor guidance from companies like FedEx, like Apple, warning that their sales will be a lot slower than expected. So two things will be interesting: if the numbers will confirm that, and how the market will react. Because if the market keeps reacting positively to even bad numbers, that's extremely positive.
Yeah, I think I'm going to do very little in this. This will probably be in the last 3-4 years, the least amount of. I'm definitely doing some selling today. I'm looking at some of these risky biotechs for my 8 to 80, or just for some new ideas in my model portfolio. Maybe it's a basket of these, but until we get clarity, we still need the large caps to at least show some stability. And the one good thing going for the market is the pessimism, right? It seems like everything that was on page 10 is now firmly on page 1, and that's why we had this massive sell-off. The real question is, how bad is it? And I think, like you said, Ivan, we're going to see when Goldman and JP Morgan, the banks, start reporting next week, how bad it is, and who they blame, and how the market feels about it. So we're not out of the woods by a long shot, but optimism is seeped in there. If you look at the momentum names, optimism is seeping in. So it's a really interesting dynamics. We'll end it there. And thanks, Market Smith, for the support of the charts. I'm excited to get market, my monthly report back going, Peloton 2.0, whatever we're going to call it, at Market Wisdom. Share some monthly ideas, and hopefully we are out of the woods. Yeah. I've been thinking better. When are you back?
I'm back in 2 weeks, and just to finish, just wish Rachel happy birthday from me, and
thanks, man.
See you next Monday.
See you next Monday. Feel better.
Yeah, thank you.